This is Peter Arender. I'm Chief Investment Officer with Fortress Fund Managers. Well, one word that's been in the news a lot recently is the word inflation. So I thought we'd spend a couple minutes talking about that and what it might mean for investors today. Inflation, what is it? Well, it's an increase in price levels, what you get with the money you've got, the debasing of your dollars. What that means today is that you've got some shortages post-COVID, and so a lot of prices are going up. And the natural question is having some inflation is normal, but having the kind of inflation we're seeing now year over year is higher than normal. So the natural thing is, too much inflation can be a problem for financial assets. Prices, stocks, bonds, all things being equal, would have lower prices in a high inflation environment. The question now is, are we getting into a more permanent period of higher inflation? And I think the thing to remember when we look at today's inflation numbers is this time last year, people remember, but we had negative oil futures prices briefly. And really, we're getting the opposite now. But the background is big fiscal spending, especially in places like the US, the Federal Reserve, other central banks, big monetary support, and would like to see inflation above 2%. So I think really the question that we're going to find is, especially here in Barbados too, where we're tied to the US dollar and much to the US economy, on balance, I would say our base case is that this inflation we're seeing now does prove to be short-term and transitory. The thing you're going to want to watch, I think, for a hint that it might not be transitory is the politics. Is this fiscal spend going to become long-term and structural? And if that's the case, I think that can be a concern for financial markets. But we're not really seeing evidence of that just yet. And don't forget, deflation can be a risk too. And nobody knows what the future holds. We're kind of thinking, as always, how do you protect yourself against inflation or deflation, whichever happens to be coming in the future? Number one thing is to avoid cash. Investing long-term, you'd like to own diversified group of companies in an equity portfolio, high-quality companies with pricing power that are profitable, spread all around the world. It's a good line of defense. And this week, our equity portfolio is up and down a little bit, on balance about flat, and still up nicely for 2021. And that is it from here.